Monday morning, I got a push notification from my Wall Street Journal app on my phone, and my jaw quickly hit the floor. Keurig Green Mountain had been bought out for $92 a share, almost 100% premium. It was like 70-something because it was at $50 before. Anybody see this coming?
Yeah, a lot of people who were short the stock did not see it coming. I'll
Game over.
The thing is, I kind of want to approach this in three kind of steps. So first, we can talk about some of the terms of the deal, the valuations based on the offer price that you mentioned, which was quite a premium, and we'll get to that as well. Then I want to talk about a little bit about the buyer, their strategic rationale, what this will mean for Keurig, and then I want to talk about some of the winners and losers, other winners and losers from this deal.
Awesome. So first and foremost, I already mentioned the price, but let's just say it again, and then how much higher was everything. Yeah.
So just keep in mind, on Friday, December 4th, the Keurig shares closed at $51.70, and on Monday after the news, they closed at $88.89, which was up 72%.
So there's a
72%.
Little bit of an arbitrage spread there, but nothing huge.
So the actual buyout price of $92 meant it actually comes out to about a 78% premium to that closing price. And it actually gets even higher with data from Bloomberg, where they basically said this buyout represents the largest premium in history for the beverage industry for deals larger than $5 billion. And when you compare the purchase price with the 20-day average price.
Right.
And, because that 20-day, when you use that 20-day average, it actually comes out to like almost 90% premium or something insane like that.
Yeah.
In terms of, the stock already was getting battered this year.
Well, I was about to say,
it was down
wasn't
61%.
52-week high, like 145.
Oh yeah, actually,
something.
It hit its high last November at $150, over $150. So it has traded down. It's lost 2/3 of its value since then, only to get
It almost
this nice
seems
windfall.
like that's the reason that the buyer JAB had to pay up the 92, because anything less than that, they would have been like shareholder lawsuits and all kinds of stuff thrown at the company.
That's true, but the thing is, at the $51.70 from the Friday closing price, it was trading about 16.6 times trailing 12-month earnings, and then when you look at the offered purchase price of $92, you're looking at about 29.5 times. Now, based on recent results, for its Keurig's fiscal year actually, ended at pretty much September, and for the fiscal fourth quarter, revenue down 13%, earnings down 15% year over year. For the fiscal third quarter, revenue down 5%, earnings down 24%, and then they were either flat or down slightly for the 2 quarters before that too. So that obvious downturn resulted in some of the weak trading, but paying 29.5 times for what you're seeing is trending down pretty into basically an unsuccessful Keurig 2.0 rollout when they did not allow third-party pods, and people went up in arms about that. Then you also have the pretty lukewarm reception to the Keurig Cold, and I think, again, this was a very nice turn of events for people who probably are otherwise in the red for their Keurig position.